Veritone just closed at $5.25 after a $6.43 peak in September, up 60% this year and 41% in the last 12 months. So does this keep climbing, or is it going to roll over from here? And I'm not so sure. Here's why. Management literally just flagged substantial doubt about staying a going concern. Cash burn, it's real, and debt service, it isn't optional. They also sold Veritone One, which made up 25% of their 2024 revenue. So the top line shrinks and diversification drops. But there's a twist. 5 analysts still call it a moderate buy with a high price target of $25. That's 376% potential upside. So what breaks first, the bear case or the balance sheet? Well, the core bet is AIware plus the Veritone data refinery actually monetizing fast. And the signal I'm watching that most people I think are missing is the post-sale cash flow versus debt covenants that over the next 12 months, if operating cash flow turns positive before those maturities bite, the story changes. If not, dilution or tougher financing is going to show up. You'll see the scenario math that gets us up, down, or nowhere, and the one metric that will tell us early. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Veritone is the creator of one of the first AI operating systems, and their mission, it's simple. Harness AI to make businesses and society smarter and more empowered. If they can pull this off, shareholders, they're going to win big. If not, it's just going to be another AI promise. Their revenue primarily comes from software products and services, with a smaller portion from managed services such as Digital Media Hub. But the question is, are they shifting fast enough towards high-margin software to move the stock? Well, that's the question on everyone's minds, and it's come up in my Discord recently. At the core of Veritone's business is AIware, a highly flexible AI-powered operating system that lets organizations customize their workflows with their best-in-class cognitive engines. It integrates generative AI, vision tools, speech and audio tools, biometrics, and others all into one nice little ecosystem. I've learned that when a platform becomes the default workflow, it can capture pricing power, and pricing power drives multiple expansion. But the question is, does AIware have real adoption depth, or is it still just a demo story? Well, imagine trying to analyze thousands of videos, audio recordings, or documents. That would take you weeks or even months to complete. AIware processes all that data quickly, finds patterns, and organizes it all into something clear and actionable. And that would save you time, improve your decision-making, and maximize the value of your data. And what does it mean in English? Well, AIware is kind of like hiring a tireless analyst that never sleeps. It tags everything automatically and hands you the insights, not the noise. Now, speed is great, but is it translating into revenue velocity? Well, AIware powers applications across commercial and public sectors. And because it runs on open architecture, new AI models and workflows can be seamlessly integrated, making the platform smarter over time. Then there's the Veritone Data Refinery, or the VDR, which transforms raw data into AI-ready tokens to power cognitive and generative AI models. Clients can license enriched data, train their own AI models, or deploy tokens into their own systems securely. And what does this all mean in English? Well, VDR cleans and packages messy data so that models actually learn from it. Think premium fuel for AI instead of sludge. So you could say that if VDR scales, every new data set can now become a recurring revenue stream, not just a one-off project. Of course, you're here because you're wondering about the stock and what direction it might go. Well, to answer that, let's start with the numbers, not vibes, right? Veritone stock recently closed at $5.25, down from its 52-week high of $6.43 in September. Year to date, the stock is up 60%, and over the last 52 weeks, it's up 41%. So you could say that momentum is positive, but it's not a straight line. And momentum without fundamentals, that's a bull trap. Now, all this is great, right? And I've covered it all in a previous video, which you can watch up here, but we do need to move on to the risks and red flags to Veritone's business model, because I'm going to keep it real here. Upside is great, but risk management keeps you in the game. The biggest issue with Veritone right now is profitability, right? That path to positive free cash flow is the entire ballgame. And how close are they to flipping the switch? Well, in their SEC filings, management expresses substantial doubt about the company's ability to continue as a growing concern over the next 12 months. And that's driven by recurring losses, negative cash flows, and substantial debt service obligations. And what does this all mean in English? Well, going concern means auditors worry the company may not have enough cash to operate for a full year without any changes. And I've learned that when this shows up, lenders, they get tougher. Equity gets diluted, and timelines, they get shorter. In plain terms, unless Veritone can improve their financial performance or restructure its debt, the company could continue to struggle to pay it off. External factors and competitive pressures further amplify this risk. So you could say that the runway, it's tight, and execution, well, it needs to be near perfect to avoid expensive capital. The company also disclosed the sale of their Veritone One, that was their full-service advertising agency, which contributed 25% of their annual revenue in 2024. As a result, management expects revenue to decline even further, in addition to their business being less diversified. And I've learned that shedding a low-margin unit can be smart if the core can replace that revenue with higher margin dollars. Next are the risks tied to Veritone's government contracts. While these deals offer strong growth potential, they also depend on public budgets, and this exposes Veritone to funding delays, smaller renewals, or even cancellations. So I think you can say that the timing risk here isn't demand, it's the procurement cycles, which can really whipsaw those quarterly results. And last, another risk for Veritone and other AI companies as a whole is that the AI software market, it's still young, unproven, and highly uncertain. Growth depends not only on consumer adoption, but also on overcoming regulatory scrutiny and public skepticism around AI. Governments here in the States and in Europe are already moving to regulate AI. They're adding compliance costs and potential restrictions. I've learned that early markets reward speed, but regulations, they reward discipline. So that's it for the risks and red flags. In my next video, I'm going to talk about Veritone's financials, so you really won't want to miss it. So with all that out of the way, is Veritone stock a buy? Well, to answer that, let's see what the analysts say. A consensus among 5 analysts rate Veritone stock a moderate buy with a high price target of $25. And that suggests as much as 376% upside from the stock's latest closing price. The average score is 4.2 and has remained flat over the last 3 months. However, there are some key points that we have to take into consideration. Veritone needs to improve its financial performance or restructure its debt to strengthen its bottom line. Management also expects revenue to decline further following the sale of Veritone One, which contributed 25% of their annual revenue in 2024, and of course, reduced diversification. But what about you? What do you think about Veritone stock moving forward? Let me know in the comments below. And while you're there, if you found the video helpful, do like and subscribe because it'll help others find this video, it'll support the channel, and you won't miss out on my next deep dive. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.